All right, guys, I know we don't talk about it a lot, but let's have a discussion today about Chinese stocks and specifically Alibaba and NEO. Because honestly, if we're being honest here, the Chinese recovery has been coming really, really slow. And when those stocks start to gain momentum, it kind of dies down just as quick as it kind of builds up. So let's kind of discuss what's going on, what the future is, and what some Wall Street veterans are also saying about that so we can kind of create a whole picture for both those stocks. We'll cover how I personally handle Chinese stocks and other stocks like that, and I'll also give you my exact plan for both of these stocks moving forward. I just ask in exchange for you to gently tap that like button and consider subscribing too. It's super easy to do if you like the truth without the hype. And just like the storm that's kind of going crazy outside right now, my group members are going absolutely nuts over the stock analyzer tool, which is just the latest tool that we have added to the Market Insiders private group, which, by the way, happens to be on sale right now to celebrate that stock analyzer tool. And you get to keep that price for the life of the membership as long as you stay a member. So you don't have to pay the elevated price that's coming to pay for that tool after this sale is over with. So make sure you check out the pinned comment down there and see everything you get. The 5 courses, the buy and sell alerts, my watch list with price targets. You guys know the drill. You get more in my group than any other group out there for the price. So make sure you check out the pinned comment and see if a membership's right for you. All right, so let's jump in this video here and see exactly what they have to say, and I'll kind of give my commentary as we go along as well.
Time for FOMO. So we are moving very similarly in this direction of EVs. Now we're going back to China. We are looking at the week that was for Alibaba because they had a nice move higher yesterday and then today just completely erased that. Now they're lower for the week.
Yeah, so it seems like the Alibaba specific news was positive. It's just the China as a whole news is not so positive. So what do we make of that then? Obviously, we didn't get a chance to really recap these earnings yesterday, Jenny. Is that a situation where that's even relevant anymore? If China's this big worry thing, does everybody just ban and ship? Because that's kind of what the price action's saying today. Or are cooler heads going to prevail? And maybe this is just a big overreaction.
And that right there is kind of telling you the difference between what he's talking about. He's talking about what traders are going to do versus what long-term buy and hold investors are looking to do with Alibaba stock. But he makes some great points there that, hey, right now, whenever you have situations going on or you have a narrative out there about Alibaba and about China in general, sometimes it can outweigh what's actually going on with your stocks. And that's not just for Chinese stocks. We saw that multiple times just this earnings season, with good to great earnings not being rewarded because, hey, the US got downgraded. So therefore, it doesn't matter what your earnings are, you're going down regardless. We just saw that play out here. So that's not specific to Chinese stocks. It goes across stocks all across the board regardless. So to make sure you don't kind of catch yourself in some of those narratives like that when they're actually not true.
People getting impatient with Alibaba because this has been, it's not just like today's selling. It feels like these names attempt to make a breakout and then they just fall back down. Alibaba shares are up about 8% this year, down 22% off their 52-week highs. They are still up 64% from their lows, but just the fact that they weren't able to hold on to what was a relatively strong earnings event for them. They saw revenue beat at around $32 billion. Their net income attributable to shareholders was up 51% on a year-over-year basis. The company also said they're pushing to overseas markets. We're seeing really strong results with revenue from their international commerce retail surging 60% on a year-over-year basis. Their cloud business, which is very similarly echoing some of the weakness we've seen, or just slowdown, I guess I'd say, in Amazon, did report revenue growth of around 4%, which was pretty much what the street had been expecting. But these results were dragged down by a drop in revenue from some of their top customers, as well as the reduced need for this remote work and streaming and education services in a wake of a more normalized China economy. However, they did see, naturally, no surprise, strong demand in their cloud business for training AI models. They did have.
I think whenever you think about that, it's kind of funny that she said that because when you look at Alibaba, as the economy goes back to normal for China and they go back on their growth rates and they continue on their upward trajectory, they're going to be the biggest benefactor of all of that. They are the largest retailer. They are the Amazon of China. Matter of fact, if it was an American stock versus, a Chinese stock, Alibaba would easily be a $300 stock. It's just, it performs that well. It's doing that well. It's that big of a company. It's just, unfortunately, it is a Chinese company and it's caught up in the crazy structure in order for us to own Chinese stocks and some things like that. So there is a risk that's there. And we'll talk about how to mitigate that risk here in just a second.
fact that they believe that the opportunity driven by AI services has just begun, saying that this is a technology revolution built by AI, not just an opportunity, but the beginning of a new era. So since the craze we've seen in AI here in the US, many companies in China have pushed then to offer their own similar products. ChatGPT is not yet available in China, but Alibaba did unveil a similar large language model back in April and did announce earlier this month they would be opening a version of that model to third-party developers. I'm sure that was a huge reason we saw a lot of optimism surrounding their report, because this name also wasn't exactly like outperforming on a year-to-date basis either in the second quarter print. But I think it is definitely today a much more macro China story. It really reminds me a lot of what I mean, I know they're completely different, but the fact that we did get that Fitch downgrade we saw selling for several days after, it seemed like this doom and gloom sentiment set over markets. And I just think it's one of those wait and see things, right? Because this is still, I mean, it doesn't change Alibaba's fundamental story. It doesn't change what the earnings told us. I think now you just have to consider the fact that this is an economy that is not going to recover as fast as we would have thought. And I think if you've been following this space, this frankly shouldn't be a surprise to you.
Yeah, I won't argue with her points there. She made great points. Pretty much like she's been watching the channel. So I don't know. Maybe she has. Who knows? You never know with these things. No, nobody's watching the channel. I know. Just you and me. Just you and us. That's it. That's it. It's our group right here that's watching it. But nonetheless, she's right. At times, the narrative takes over for the stock, and it doesn't matter what the earnings are. It doesn't matter how great it is. It doesn't matter what the long-term outlook is. Traders in the short term take control of stocks in the short term. But over the course of the long run, that's a much different story there in regards to, a stock being beaten down forever and never coming back. Well, that happens if the company's fundamentals aren't getting better and things underneath aren't necessarily getting better. It does eventually turn on that narrative, regardless of what the narrative is. The stock's eventually going to run because people are going to recognize that. However, this is a very strong negative in regards to what's going on in China. Of course, the distrust in the Chinese government, and a lot of other things like that. So those are additional layers of uncertainty that kind of come along with Alibaba, but her point that she made was spot on.
Yeah, I think investors are saying, okay, you can wait and see, Jenny. We're just going to get out of this stock today because it's down pretty substantially, almost 4%. Buybacks seem to be a big part of the quarter to me. $3.1 billion worth of the depository shares were purchased by the company in the quarter. That's a big number for a pretty big company, even like Alibaba. So boosting some of those bottom line numbers a little bit through some of that shareholder friendly activity. From a trading standpoint, though, Jenny, I think this just comes down to you're going to have an opinion in a name like this. It can be a neutral opinion. It can be an opinion of, I don't want to trade this because there's too many unknowns. It can be whatever. But when it comes to this stock, as you said, it's seemingly been unable to break through meaningfully to the upside. But the worst of last year, where the stock was just down after down after down, it was a 2-year sell-off, seems to be over too. I don't know where it's going next, but we're looking at a bullish call calendar, sort of building on a strategy that we looked at pre-earnings, where we looked for a move right to 100. We kind of got that. And then if you want a chance to reload as the stock's now 4% off that mark, here's a chance to look at that again. So what we're looking at is buying a call calendar, selling the September, buying the October. So not only are we in October or September options, we're potentially in October options at this point now, Jenny, on strategies that we look at here. 100 strike, $2 debit would be $200 in risk. If we look at the risk profile, it's going to be a mountaintop-like peak with some, kind of parabolic-like curvature to it here. It's not going to be as rigid as some of the iron butterflies or back ratio spreads. This one's a little bit more nuanced with the options across 2 different expiration cycles. But one thing that is consistent with this type of a strategy is a move towards the strike is really what you want to see happen. And so a move towards 100 is going to be our theoretical best case scenario. With this, it does have risk in both directions, as you can see there. It can, of course, move away from 100 to the downside. That will work against us. It can overshoot to the upside, too. So something to consider when looking at this style of trade. But
And you see exactly right there why I don't trade. There's literally thousands of different strategies you can implement at the same exact time. And I have no interest, looking at a strategy like this where, oh my gosh, it just, for me, keep it simple. There's a lot of complexity in this. There's a lot of, you're playing both sides of the fence. Therefore, you could theoretically win and lose depending upon how far onto the other side of the fence you run and some goofy stuff like that. So you just kind of, I mean, you see it right there on the chart. It's ridiculous. Like, this is the reason why I don't engage in these games. Now, I have other folks that I know personally that play options games specifically just like this and talk about these crazy, ridiculous strategies with 37 different crazy names. They actually get kind of fun and a lot of other things like that. But oh my gosh, the complexity, the worry, the amount of looking that they have to do day in and day out to do that is just crazy. And in this scenario right here, holy crap, man, if my stock runs, I could lose. Like, it makes no sense to me. I understand the play on both sides, so that way you're trying to win regardless of whether it goes up or down. I understand that. But this is just one of those reasons why right there, whenever people start throwing out charts and graphs and plays like this and talking about different strategies, you have to understand that is not long-term buy and hold investing. That is a very, very, complex option strategy for advanced option players only. Shouldn't even honestly be discussed on a regular TV show like this, because unless you are that far into that world, this is a very, very tough strategy to actually pull off. So it's just kind of one of those things right there that I just kind of wanted to point that out ahead of time. For me, yeah, way too complex. I'll just buy the stock whenever it dips and hold until it gives me the return that I want over the long run. It's a little bit easier than this.
A kind of aim small, miss small type of a stock strategy or option strategy that we talk about, in which it can be customized quite a bit. And in this case, we're risking $200 with a chance to potentially turn that into more in this illustration if that move towards 100 were to come to fruition, let's say over the next month or so.
I can't even acknowledge an October expiration because that to me seems like it should be light years away. But I also do want to point out Benchmark did raise or give a buy rating and raise their price target to $180 a share. So it's like this name has the most discrepancies among those that cover it. I think you nailed it perfectly. You have to have a strong opinion one way or the other, of course. We will leave it there, though, for all things Alibaba.
Okay, so now that we have that over with and, we're kind of done with the video per se of those guys talking a lot of trading stuff there at the end. In regards to price targets, things of that nature, the reason why is because it's so undervalued. And where do you put that multiple for a stock like this? It's a great company. It's, going to be a beast now. It's going to be a beast in the future. It's a huge driver to that Chinese economy. However, you still have that wild card that is the Chinese government. And until we move to a more risk on, more in the, Western world of stocks, it's really, really hard to put more money towards, even if it seems and appears to be a great deal like Alibaba is, towards a stock like that moving forward in regards to, when you have these other opportunities in the American stock market to where you're not necessarily looking for that risk alpha that's over there with Chinese companies. Now, in regards to how I mitigate those risks, because I do own Alibaba, I do own NEO, the way I mitigate those risks is with position size. I do not have large positions. Alibaba is the Amazon of, China. Great company. Great company. I love Amazon too. My Amazon position dwarfs my Alibaba position. My Tesla position dwarfs my NEO position. They're not even close because I can't take on that additional risk, even though I like the companies, I like the fundamentals, I like what's going on there. Actually, NEO has been having okay to not so great earnings the past couple times. They definitely have some struggles. I definitely think they're having some things that I personally don't like. In regards to, I think they're kind of looking to expand brand too much and maybe not getting as deep into the manufacturing and actually delivering and actually kind of moving forward on a lot of other projects that to me will drive more revenue, more EPS to that bottom line eventually. That's there. But again, that's not necessarily saying that they're doing horrible either. You're not in a situation to where they can't sell cars at all or they can't make cars or anything else like that, like we're seeing with a lot of the other EV players that are out there. So for me, that's how you play these stocks. There's opportunities there, I would agree, but you have to use position size in order to kind of mitigate that risk. And as far as for me, I already have the shares of Alibaba and of NEO that I want. I made huge average downs during the dips last year. I can't remember the call now, but essentially I was able to make two huge buys into NEO and into Alibaba at different times that really, really lowered that average really, really down to where, hey, we're basically in the green on both positions at this stage or close to the green at this stage in both positions. So if they do go back up to a run, not back up to all-time highs or anything like that, just a nice little run up, it's going to be a very, very green position for me. And that's kind of the way I've handled these stocks and the way I'm going to continue to handle them. So I'm just going to hold them, wait and see what happens. And again, these things take time. What's going on in China is going to take time. And like they said, it's going a little bit slower than we thought. And okay, is what it is at this stage, right? That's why I have that position size as small as I do, so that way I don't have to worry about that. It's not making up 50% of my portfolio or 80% of my portfolio or anything like that. It's a very small position, so I can afford to be patient with it and let it grow itself into a much larger position. And just like the storm that's kind of going crazy outside right now, my group members are going absolutely nuts over the stock analyzer tool, which is just the latest tool that we have added to the Market Insiders private group, which, by the way, happens to be on sale right now to celebrate that stock analyzer tool. And you get to keep that price for the life of the membership as long as you stay a member. So you don't have to pay the elevated price that's coming to pay for that tool after this sale is over with. So make sure you check out the pinned comment down there and see everything you get. The 5 courses, the buy and sell alerts, my watch list with price targets. You guys know the drill. You get more in my group than any other group out there for the price. So make sure you check out the pinned comment and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.